but we're here to talk about the general stock market and why it's crashing. Since October 12th, for the S&P 500, it's down 7.5%, for the Dow Jones, it's down 8%, and for the Nasdaq, it's down 8.1%. These three major indexes are comprised of anywhere from 30 companies to 3,300 companies. So clearly the general broad stock market is going down and quite rapidly, because that's only maybe 20 trading days or less than that actually, where the stock market has dropped by close to 10%. And this is significant as investors and we must pay attention to that. So if you want to know what I think about the stock market, then stick around. And also at the end, I'll be talking about an investment that's worth around $250 billion today that's actually going upwards despite the market crashing 10% almost. What's going on, you guys? Welcome back to my channel. My name is Daniel and here we talk about stock market investing with a focus on Canadian stocks. But today we're talking about the general broad stock market, and Tyke, my dog here, is going to be joining us, so she may be wandering around in the background. If you want to see what I've been doing in my portfolio in the past month, then subscribe and hit that notification bell because I will be releasing a video next week on all the activity in my portfolio. For those of you who are beginner investors out here, one thing that you should know about the stock market is that it's actually forward-looking. So the stock market doesn't really care about what's happening today or what happened yesterday. They care about what's happening in the dates coming forward. So people are forward-looking and trying to predict where the economy might go in the next year or so. And prices in the stock market are ultimately set by supply and demand. And people who have larger sums of money and are larger investors in the market will often move the market a lot more than people with smaller sums of money. Because when people with larger sums of money put in a buy or sell order, their buy and sell orders are larger, causing the supply or the demand to surge greater than someone with a smaller amount of assets. So with the stock market down as a whole, it seems like there's quite a bit of selling right now. So there's a lot of supply coming into the stock market and not as much demand, and therefore prices have been falling. So let's discuss 4 reasons as to why this could be happening right now. The first reason for the stock market crash is likely due to no more stimulus. And initially, when the whole world was put into a pandemic, the USA decided to release a lot of stimulus to its citizens. Many low and middle class workers were affected by the pandemic and got laid off from their jobs. So the stimulus acted as their paycheck, and ultimately the economy is driven by the lower and middle class because they make up the majority of the spending in the US economy. So when the lower and middle class got stimulus checks, the economy could continue on as these people had money to spend and businesses could continue to operate. For that reason, investors bought back into the economy or the stock market, realizing that company profits were not going to tank as hard as they thought because stimulus checks would help those businesses continue on and consumer spending wouldn't drop as far as they predicted before. But now that the stimulus has been halted until further notice, this is going to drastically affect consumer spending. As I mentioned earlier, lower and middle class make up most of the economic spending, and these people are largely hit by the whole pandemic and losing their jobs. So we'll likely see spending reduced, which will ultimately affect businesses because they'll see less revenue as consumer spending has gone down. And when businesses see that the revenues aren't accelerating as quick as they were or are actually dwindling, then they'll have to do things to cut costs. And this will ultimately mean people getting laid off, business purchases being put on hold, and this will just kind of have a spiral effect for the whole economy, and we could see another economic crash. Also, one more risk that no stimulus poses is that the housing market could also crash. Just like 2008, where people were unable to pay their mortgages, right now, people who are relying on stimulus to pay their mortgages aren't able to do that because they're not getting stimulus. So we could also see a housing crash as well as people default on their mortgages. The second reason for the stock market crashing right now is possibly due to the rise in cases of COVID-19. So if you look at all the charts around the world, you can see cases are on the rise everywhere. Countries like Germany and France have had dramatic increases in their cases such that they're going into a second lockdown. And the second wave seems to be a lot worse than the first wave in terms of number of people infected. Also for the United States, they're kind of in their third wave right now, and if you look at the charts, they don't look very healthy as well, and things are going a little parabolic. Here in Canada, cases are also on the rise, and I'm seeing a lot more lockdowns here in Ontario, especially in the hotspots like Toronto. So with countries going back into lockdown and restrictions placed on citizens being able to go out and spend money ultimately, then this is going to cause a lot more economic stress on businesses, We're seeing a lot of retail stores and restaurants shut down after years of operation because they're just unable to pay their rent and afford to pay staff as well as the debts that they may have racked up. In places where restrictions aren't imposed on people, we can also see a decline here in economic activity because I think there's just general fear in the whole world right now that the second wave is coming. So people are going to be less likely to go out just everywhere in the world. So this will cause a lower amount of consumer spending, and ultimately businesses will get hurt and people will get laid off, and kind of the whole cycle keeps spiraling and spiraling until we hit some point where maybe the government steps in. The third reason as to why we might see the stock market crash right now is because of the hope of vaccines. So initially when the pandemic began, experts were predicting that there'd be a vaccine possibly in the fall time or at least by end of 2020. However, looking at today's progress with all the trials going on, there's been a few setbacks. Large companies like J&J and AstraZeneca both had their trials on pause because there are some health complications in some of the test subjects. And this has had investors reconsider the timeline for a vaccine to come out, and ultimately the vaccine would lead to economic recovery, and this led to investors rethinking when the economy might actually open. Some people think that the world could still stay in these semi-lockdowns or full lockdowns until 2023, so that's 2 years from now. That's quite a long time for the economy to be in a lockdown and businesses not being able to operate at full capacity. And even when a vaccine does become available, it's uncertain as to how many people will actually take it. There has not been enough testing, and although they're doing this accelerated testing right now, who's going to want to inject their body with this vaccine and not know what the long-lasting effects could be? There are some brave souls out there doing the testing right now, but for me personally, I don't think I'm going to get that vaccine right when it comes out because there is still high risk that ultimately it could have some long-term health effects. So even with a vaccine out, we may see a lower adoption than initially predicted. And this brings greater risk to the economy because A, we don't know what the long-term effects of this vaccine are, and B, we don't know how many people are actually going to adopt it. So there's still quite a bit of risk even if a vaccine is released and available to the public. The fourth reason to the decline in the current stock market is because of the election risk. After elections happen and the new elected party takes over the White House, it's uncertain as to what they'll be doing in the New Year's. Right now, as parties are campaigning for the election, not much policy is being made. And really, it's just lofty promises being thrown out there by politicians trying to get voters to be on their side. However, once reality hits and the election dust settles and the elected party takes over the White House, then policies will start to be made and adjustments will be made to the government. And this is where uncertainty comes in, because not all the promises that politicians make during their campaign will come true. In fact, most of the promises that they make will probably not come true, or they'll be fulfilled half and half due to different constraints that they have. These are things like budget constraints as well as a whole democratic voting system which could block a lot of policies. So from an investor's perspective, many people are getting out of the market, keeping their money in cash, and waiting to see what the new government will do. Right now, if we look at the polls, it favors Biden and the Democrats. And in general, this is bad news for investors because Democrats often favor higher taxes for businesses as well as higher taxes for the wealthy. So for businesses, higher taxes, what that means is that their profits are going to be less. And for us as investors who are shareholders in these companies, we could see dividend rates go up less over the years, and we could also see high growth stocks having their growth stifled because their profits or revenue are being poured into taxes. So ultimately, higher taxes will affect innovation as well as dividend growth. How companies used to get around this was actually storing their money overseas. And if you look at Apple, they're a prime example of this. Back in, I think, 2017 or 2018, they had billions of dollars of cash over in Ireland. And Trump was trying to get them to bring it back over to USA so they could deploy it on USA and actually have more jobs in USA by building a factory. And I'm not sure how successful that was, but he ultimately lowered taxes to try to entice companies like Apple to bring their cash from overseas back into America. If corporate taxes are raised by the Democrats, this is going to have the opposite effect, and Apple will actually pull their money out and bring it back overseas to countries like Ireland. For the wealthy, the same thing will happen as well. Wealthy people have the money to hire accountants to find tax loopholes or have ways to hide their money in overseas bank accounts like in Switzerland and be sheltered from tax from there. With wealthy people and businesses pulling their money out of America, the lower and the middle class will actually be affected more because they're the ones who are going to continue paying their taxes and maybe even have taxes raised when the government realizes that businesses and wealthy people aren't paying their share of taxes. And with the government having less money, then that means less spending for social programs, which ultimately benefit the lower and the middle class. There seems to be quite a bit of risk in the market right now with these 4 different reasons as to why the stock market is possibly crashing right now. Now I'm going to be discussing what I plan to do, as well as this interesting investment that's worth $250 billion that's going in the inverse direction to the markets. But first, if you guys are enjoying this video so far, please leave a thumbs up down below, as well as subscribe and hit the notification bell if you guys are new here. Right now for me, I don't plan to sell any large portions of my stocks. I may do some minor readjustments to my portfolio, but for the most part, I'm fairly happy with my holdings. My growth stocks are generally more future-proof, for example in the telehealth sector as well as the fintech sector, which I think are only going to grow going forwards. And for companies like REI, for example, which is a dividend play, I think that they've got enough cash on the balance sheet to weather this storm. And they're going to be able to continue paying out their high percentage dividend, so I'll collect that in the meantime while the market is going down. If anything, I'll be looking for opportunities to buy into these assets that I believe are good long-term holds. Because when the market drops by 10%, I see that as a 10% sale in the stock market. For those of you guys who are new to investing, I've mentioned in previous videos that it's always good to keep cash on the sideline. And right now I do have some cash in my Wealthsimple portfolio as well as in my checkings accounts, which I'm able to deploy at any time. So if you don't have a cash reserve right now, I think that you should work on building that up and keep this in mind going forward. When the stock market eventually recovers, always keep some money in cash. For the investment that I talked about earlier in this video that's worth $250 billion right now, that is Bitcoin. And maybe some of you expected this and some of you didn't, but if you look at the charts of Bitcoin right now, they're diverging with like the S&P 500 as well as the Dow Jones and the Nasdaq. We saw in the past 10 to 15 days that Bitcoin prices have soared while the rest of the market has tanked. Bitcoin has roughly risen by 20% compared to the rest of the market, which is down 7 to 8%. So I think right now there's an interesting thing going on in the market where investors may be looking at Bitcoin as the new gold. Even gold is going down right now. It's down to about 1867 today, whereas it was around 1900 back in September. So maybe Bitcoin is the new gold, especially for younger investors out there. I think that platforms like Square and PayPal, which PayPal just recently adopted Bitcoin, I think investors who are on these platforms are seeing Bitcoin as a more of a viable investment as the world continues to figure out what uses these cryptocurrencies have in general day-to-day activity. But there is no doubt right now that large companies are paying attention to Bitcoin and even banks are paying attention to it. So as investors right now, maybe consider looking and learning about Bitcoin as Bitcoin is going up. Don't dive right in because this is still a high risk investment unless you know what you're doing. And if you want to buy Bitcoin right now and you're in Canada, you can do so on Wealthsimple Trade, but you have to sign up for a Wealthsimple Trade account. I linked in the description down below. You can get $10 towards opening an account if you do that today and deposit $100 and make your first trade. There are also other platforms that allow you to buy and sell cryptocurrencies like Coinbase or Coinsquare in Canada. So you can check those out if you're interested in learning more about Bitcoin and possibly investing in it. But take caution and do your own research if you are planning to invest in this asset. One last thing that I want to mention about Bitcoin is relating to supply and demand. So if you look at the supply of Bitcoin, that's fixed. There's only X amount of Bitcoin out there, no more, no less. And you can't continue to create more. And the current total available supply, the increase of that supply is dwindling each and every day. Because as more Bitcoins are mined, it gets harder and harder to mine, meaning it takes more and more computing power and ultimately more and more electricity. So the expense to actually mine a Bitcoin goes up and up and up. So we can see here that the supply of Bitcoin is fairly fixed and not really going anywhere. But the demand side, this is where it gets interesting. So the demand really fluctuates. In 2017, there was a huge demand for Bitcoin, and that's why we saw the prices surge from I think $1,000, which is the previous all-time highs, all the way up to around $24,000 before dropping back to $3,000. So this asset is highly volatile. And that's because when Bitcoin runs, there's a lot of FOMO in the market and people decide to buy in without knowing what the investment is. And right now, we still don't exactly know how Bitcoin is going to be used in the future going forward, let alone how cryptocurrencies can actually be effectively used. So there is quite a bit of risk as the demand side can fluctuate on a dime. But if you like charts and patterns, Bitcoin actually follows somewhat of a pattern. Every few years or so, Bitcoin has a huge spike up, then crashes like 80%, but it doesn't go back to its previous all-time lows. So Bitcoin ultimately started at a few dollars, I think back in the year 2000, and since then it's grown to today at around $17,000 or $18,000 per Bitcoin, and that's in Canadian dollars. And right now we're sort of in the new phase where Bitcoin could be breaking out. If it does cross the previous all-time high, then we could see another surge in Bitcoin, and some people predict that Bitcoin could run anywhere up to $400,000 worth per Bitcoin. And that roughly represents a 25 times in Bitcoin's current price today. If you guys are new to the channel, click on the videos right up here on the screen as I discuss my stock market portfolio and how it's performed in the past. If you guys are over there, I'll see you there, but if you're not, keep up the grind and have a great day.